Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder and this is BRN AM for Friday, September 18th, 2020. And here are our top stories. We'll take a spin around the fintech ecosystem and then Rocket Dollar giving liftoff to individual access to private markets. Well, joining me now to discuss this and a lot more is Henry Yoshida. He is the founder and CEO of Rocket Dollar. Henry, thanks so much for joining us on the program this morning.
Thank you very much. Thanks for having me.
It's always a pleasure talking with you. And the audience may not know you directly, but you are really an entrepreneur. You have built fintech startups. You're currently working on Rocket Dollar. And we've talked a lot on this program about fintech. I want to get your perspective as someone who is embedded actually in the industry, trying to revamp processes. What's going on there?
Yeah, so fintech, it's weird. It probably started as such a niche term, even as recently as maybe 5-6 years ago, and it's become such a dominant play. I've even heard people on the investor and the capital provider side of this industry kind of say that maybe fintech is starting to get into all industries. So in other words, all industries are starting to become fintechs. Companies are starting to try to take back their payment rails, or they have them set up in a way to where it's very suppressed, mostly because a lot of these individual companies actually have to have a direct relationship to be able to sell their products or to be able to take monthly subscription fees that, you'd be hard pressed to think, but there's probably a triple digit, maybe even a 4-figure amount of individuals at certain companies like Netflix that actually work on payments processing alone. And just pretty much any company you can think of. So think Amazon, for example. I mean, they would have thousands of employees just working on finance related items and so forth. So, I think it's become a big play. Of course, for this audience and for my background, as you know, Jeff, that I kind of focus in the wealth management and specifically in the retirement, in the tax advantaged account space. So I kind of point my particular endeavors and businesses into improvements and or I guess looking for new opportunities in that particular space.
And throughout our coverage, we have talked and a lot of about what you're talking about, where digital payments, trying to strategize and make that better. In fact, last week we actually discussed payday loans, and there are organizations like Square and others that are revamping that and making it cheaper to get money in advance of your paycheck. But in terms of being an entrepreneur and building a company, obviously it's challenging. What are some of the key factors to not only your success, but its success in general?
So before you start any business idea, I'm a big believer in that the people who are very successful are folks who, there's 2 tracks. So one track says that it's always great when someone comes in with completely fresh eyes, and which is just basically another way of maybe saying absolutely no particular experience in this area, to come into an existing industry and then try to develop a company because they're not hindered by any of the biases. I'm on the other track where I think it's very important for someone to have, deep, intricate industry expertise and then figure out areas where there are inefficiencies. So that's why I kind of stay with what I know. And, I didn't try to create some sort of e-commerce company or social media type company. But the way I look at success and how you develop a business inside is to look at a large fragmented industry and then a part of it where, quite simply, maybe NPS scores are really, really low. And then you build a business from the ground up in that particular industry. And then you try to vertically integrate all the pieces that go from acquiring the customer, fulfilling the customer account, servicing that customer, and then delivering that service or product on an ongoing basis. But so in short, it's just find large fragmented industry with bad NPS scores, then build a vertical supply chain within that industry as your business sort of foundation.
Yeah, and in terms of access to capital, sorry, I think my mom might be texting me.
But you got to answer that then.
Yeah, well, we'll answer it later. But in terms of, hi, Mom. In terms of access to capital, because starting a business, very challenging. These are obviously very volatile times. What are some of the different tracks? You can fund it yourself, but you can also go the venture route. And I know you've kind of explored both paths.
Yeah. So for me, I did start a consulting business in the retirement plan space, and that was sort of self-funded. It was a different sort of growth trajectory that the people that follow that business might expect. But I think when you're building a product or technology product in that space, it really does sort of take additional outside capital on the front end. So someone who's got some aligned incentives in terms of being able to sort of understand that you need to basically build a product foundation first, and you're going to incur losses to do that. And so they have the expectation coming in that this isn't a bank loan, but this is a venture type investment in exchange for equity, and in the hopes that there'll be tremendous growth down the road. And then also the expectation, just so you know, is that that in this particular space, and maybe something not as well known for the BRN audience, is that the expectation is that you would need to go back to them for additional capital. So there's a small amount that's deployed on the front end to achieve and hit certain milestones, which are not always tied to, let's say, revenue and profitability, but probably more tied to delivering a foundational base version of the product, an MVP, and then being able to show early traction and early sort of your hypotheses for who you thought your customers are. Is that actually coming to fruition? Who you're getting as your customers, essentially.
And then, data has been a topic in our industry for a long time, Henry. I mean, understanding participant behavior, understanding individual behavior in terms of investing. Yeah. How important is data management to what you and other fintech entrepreneurs are trying to deliver? Is that the underlying thing that you're trying to achieve, is just understand people's trends towards behavior and what they're doing, and that actually is more valuable than the actual transaction itself?
So I don't know if it's necessarily more valuable than the transaction itself, but let's break down data into two sides, right? So before you go in with a particular business model, you need to actually know, what market are you playing in. So when I look at data, I think about things like the gross numbers for Rocket Dollars purposes. How many accounts or how much potential money is there for me to try to accumulate in our particular product segment? And then who and what make up the people and the characteristics of those individuals that might buy that product. So in the early days, what you're doing is you're really doing a deep dive and doing well beyond just, kind of personas and profiles, which terms have come up a lot in the retirement industry. But you're actually trying to learn where they live online as a total offshoot and an extension of where they might have their money and how much money they have. I mean, those are great data points, but you need to also know that there's a high correlation between people who went to XYZ school or work at XYZ place who might become your customer, and crunching that. And we're actually working on a big data project now, because as our data set of customers and prospective customers grow, we're actually trying to dig a little bit deeper and understand more points. So we concentrated on 6 key points to begin with. Now we're trying to double that to 12. And then once we sort of, get very granular on that persona, it's to then try to replicate where we can find those individuals, like those people that we have today, the foundational, let's say, first 500 customers or 100 customers, and go find 5,000 or 50,000 more of those prospective customers and where they live. But that part's very, very valuable. But in and of itself, we don't sell our data, but we use it as a tool for us to be able to hyper target additional customers in the most cost efficient way.
Well, Henry, we're going to take a quick break, but when we come back, get ready for liftoff, because we're going to find out more about Henry's venture, Rocket Dollar. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The windows on our homes, they protect us and the ones we love, but they do much more. At Renewal by Andersen, making your home more comfortable is at the center of every window we make. It's why we custom build our windows in America and install them in as little as 1 day. It's why we build our frames with exclusive FIBREX composite material that's 2 times stronger than vinyl. It's why our glass helps keep your home warmer in winter, cooler in summer, and quieter all year long. It's why we stand behind every window with a 20-year limited warranty. Why not help lower your energy costs while giving your home and family the best? Call 1-800-835-6525 to schedule a free in-home consultation. Buy one, get one at 40% off with this special offer. Plus, get special financing with no money down, no monthly payments, and no interest for 1 full year. Renewal by Andersen, the better way to a better window. Call 1-800-835-6525 now.
Welcome back. We're talking to Henry Yoshida. He is an entrepreneur, fintech entrepreneur. He's also the CEO and founder of Rocket Dollar. Henry, thanks so much for staying with us this morning.
Thank you very much. Appreciate it.
Well, yeah, really appreciate the primer on what it takes to be successful in fintech and get your observations as someone who is in the space daily, building, creating. Now let's talk a little bit about Rocket Dollar. I kind of teased that we're going to get ready for liftoff. What is Rocket Dollar, and how does it do the things that you outlined in the first segment, help individuals? What does it help individuals achieve?
Yeah, so there is something to the name, and it was actually my then 6-year-old daughter who helped me come up with the name. So I was testing out names in and of itself, but Rocket Dollar is a digital platform that lets people take IRAs and old 401k monies, keep the tax benefits, but instead of stocks and bonds, they can go into private and alternative investments. So the term Rocket was just a rocket allows you to go to places that you normally wouldn't be able to go. And in this case, we sort of thought that this symbolized what we could do with people's existing tax advantage monies.
And there's obviously a huge market here. You've got baby boomers who are going to be retiring. Many of us in Generation X will be retiring in the next 20 plus years. And so the question is, what do you do with those assets within 401k plans? I know we've got the Secure Act and things going on there in terms of in-plan options, but people are still going to roll their money out. And so it looks like you're trying to serve as one of those important destinations.
Yeah, and I do think about IRAs as a destination point. So as you know, I've been a consultant in the retirement plan space for far more years than I've actually been an entrepreneur building businesses. So I kind of cut my teeth spending 10 years at Merrill Lynch. And even though I worked in the 401k space, I sort of realized that the end of that chain was always money flowing back into an IRA, at which point people had a little more individual control, until I learned that individual control was actually relatively limited to just the public market security universe. And my thoughts were that as people look for other diversification purposes, that they can expand the use of the monies in those accounts to go into things that aren't publicly registered. So alternatives doesn't mean, high risk, esoteric, hard to understand investments all the time. And it could also mean a rental property. So there's billions and billions of dollars sitting in investment property homes, but people could actually go into those investments with tax advantage dollars just as well as they could with cash and leverage.
And I mean, you bring up a great point, and we recently had on John Epstein from Deculta, Charlie Nelson, who's on the board of Deculta. I know you've spoken at Deculta. This is a huge topic here in the retirement space. Those people that are in public pension plans, private pension plans, endowments, well, people aren't necessarily in endowments, but those asset pools do invest in alternatives. And there seems to be a disconnect in the retirement plan, employer-based retirement plan space that, would potentially allow greater additional returns in that space. Is that an area, is that why you necessarily chose to create Rocket Dollar, to give access to what people may not have access to today?
So access is one thing for sure, just because there's a large aggregate pool. So I just saw this, it got recently updated by ICI and Brightscope data, but just earlier this week, they finally crunched the numbers that at the end of 2019, that IRAs now got to $11 trillion. So I'd always publicly been using 10 because that's where the number was when it was last measured in mid 2017. But 99.5% of that money is in the public securities markets, which left a very small amount that went into private and alternatives. So access would be one component of it, but at the end of the day, I've also been a certified financial planner since the early 2000s. So I've always thought about it more of what you just described in the endowments and the pensions and the institutional investors having a sleeve, a very large sleeve, as a matter of fact, of their overall portfolio in alternatives, was for diversification purposes and non-correlated asset purposes. But that really was very difficult to achieve at an individual level. So people tended to be very heavy into public market securities, stocks, bonds, and so forth, without the ability. So providing access solves one of those problems. And then the secondary sort of consideration is that it really does let people diversify like the sophisticated investors and so forth. Then Dekalta's mission, of course, is to do that through a controlled channel, whereas mine might be for folks that have a little more comfort or knowledge about a direct investment and choose to use an IRA that they control individually to make an investment into something they know that just happens to not be publicly traded.
And in terms of reach and your customers, how have you seen that grow over time? Clearly, you're building something that people are attracted to, they want, but how has that trajectory grown over time?
Well, what's funny is that I think that it's a lot of awareness. So I'm kind of known as the person now that after you have a short conversation with me, you kind of find out that you can actually do some different type of investment with your IRA. So about 80% of what I have to do, what I have to be the model for, is to just show people it's possible and to show people it can be done in a controlled way through, let's say, an efficient platform like Rocket Dollar, and then going into an investment that you have the comfort to understand. It may be close to you geographically, or it may be close to something in terms of industry. So the acquisition of the customers, and this goes back to that data conversation we had before the break, is that I have to know who the customers are. But what we really, sort of feel at Rocket Dollar, our goal is that we have to just educate people that it's possible. So we have over several hundred articles posted on our own website in a knowledge base, blog posts. We've written a book that people can actually, request to get for free from our website at rocketdollar.com. And we've taken the angle that we're agnostic as to what investments you go into and maybe even what provider, but we do want to be the ones to show you that it is possible to do something other than your mutual funds in an online brokerage account within those accounts.
So a lot of it's educational. I mean, people go to the rocketdollar.com website, they go to the knowledge base, they're educating themselves and they're finding out what the possibilities are. Henry, when you think about the future, and I don't want to get too far ahead of where you are, but any entrepreneur is thinking about the future, or else why would you build something, right? I mean, how do you see this kind of growing over time in terms of volume, in terms of volumes of transactions, volumes of people, and then fitting in with the existing retirement ecosystem?
Yeah, well, as you know, I have a lot of deference and respect for the existing retirement ecosystem. So I've never really sort of fashioned myself as someone who's trying to come in and disrupt this model or say that the current model stinks. We all know in this audience that there's plenty of people that do that. So I don't need to add to that. And I don't believe that either way. But the way I think it grows is, I think about this from a high level philosophical point, which is that let's take that number, $11 trillion again in IRAs. And I'd also mentioned that if we round up, 100% of it's in public market securities. So in a way, all of this large pool of capital that's held by the broader base of, let's say, middle America, the big fat middle part of the United States population, working population, who has money and accumulated in corporate retirement plans and then flow back through to IRAs. And not everyone in America has these accounts. So that's another problem altogether that hopefully another entrepreneur or someone in the industry solves. But it's being funneled into the same 3,675 publicly traded companies, arguably being distributed by, let's say, the top 10 asset managers and the top 10 online brokerage firms. So from a philosophical standpoint, I think that by allowing monies to flow into private investments, it might actually be a more localized distribution of capital from the people in one community that have these accounts into businesses or properties or opportunities in the same communities that need capital. So, what we've seen with our investments are that since we're not guiding them and we're not recommending the investments themselves, we've done a lot of crunching on what people do. And what we find is people are actually going into investments that they know about. And those things tend to be close to what their knowledge base is in terms of industry expertise, or physically close to them in the way of like a rental property. So I think of it as a really neat distribution of capital that goes more localized versus me in Austin buying a mutual fund for a company based in Boston that's being distributed to me by a firm and a financial advisor who's based in Wall Street.
Yeah, really, really interesting thoughts, very thought-provoking. Henry, we're going to have to leave it here. Best of luck with Rocket Dollar. Thank you so much for joining us on the program. And look, we look forward to having you back very soon.
Thank you very much. Appreciate it. Have a good morning.
And that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to? Drop us a line. And don't forget, for all the news in retirement, markets, technology, personal finance, and more, check out our daily newsletter, The Morning Pulse. Don't forget, we're back again tomorrow for our weekly look back show, retrospective show, BRN Weekly. We've got another great special guest. We'll also be taking a look at some of our best segments for the week. You're not going to want to miss that one, of course. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Waiting here for you to take and drink of. But if you're tired of the same old stuff.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.